How likely is it, looking at the moment, that we're going to get an equivalence that makes trading in these markets not too disruptive?
Thank you. Pleasure to be here. I think that we will probably get a resolution. However, currently we don't have one in place. The big key for the markets at the moment is liquidity and ensuring that that's sustainable on an ongoing basis. At the moment, we have something called, under MiFIR, the share trading obligation. That came into place affecting buy-side and sell-side participants equally. And it simply states that we must trade shares on an EEA venue, which is the European Economic Area, where it is available, or unless another venue has market equivalence. This obviously presents an issue if we leave Brexit without a deal and without equivalence, because it essentially means that we will be forced to trade on a venue within the EEA, even if that isn't the primary listing, which means liquidity will be a challenge.
Yeah, so just talk us through, for example, if somebody wants to trade a stock that's listed at the moment in Germany and in the UK, how could that actually work? And have you actually seen any challenges so far with clients who want to make that sort of trade?
So not yet. This is all to be seen in a post-Brexit environment. So, for example, if you had a German asset manager who wanted to trade a UK-listed security post-Brexit without a deal in place, if that security was listed both in the London Stock Exchange and, for example, on a French stock exchange, we would be forced to trade that security in the EEA, or if that asset manager was from the EEA, would be forced to trade it on the European Stock Exchange, even if that meant liquidity was less and pricing was poorer, which means that best execution can become a real issue.
So you're obviously talking to clients about this all the time, and I'm wondering what other sort of concerns and disruptions you're seeing at the moment. I understand that this scenario that you've outlined hasn't happened yet, and you're hoping it won't if you get some form of equivalence. But what kind of conversations are you having with clients about their biggest concerns at the moment?
So our clients are, we're not massively worried at this point in time. ESMA came out and issued a paper on the 17th of March. The FCA quickly responded. The FCA requested for more cooperation between ESMA and the regulator. We still have time to see that happen. So I still see a solution presenting itself. It's in no one's best interest to fragment liquidity.
Yeah, and you've certainly made the point that there's a sort of no sense of panic. We were talking before we came on air about that. But in any case, you are making certain preparations. What preparations are you making?
Of course, we're making certain preparations. I think, you know, we've adopted a very common sense approach. So, for example, we've had to repaper some of our legal agreements with our banks and liquidity providers as they've transitioned away from UK legal entities into European legal entities. This isn't a small undertaking. It requires legal resources, time, extra due diligence, etc. So a lot of time, money and effort has been spent into ensuring that we have a situation where we can continue to operate post-Brexit, deal or no deal.